Hi everybody, Richard here on Thursday the 30th of September. The books are going to be closed off for the September quarter pretty shortly, and certainly this market has held up. This is the Dow, a daily chart. You can see that the resistance is held in. We've got no further highs at the moment, and I guess we're just waiting to see whether or not this is going to break down, and if so, what would that mean? Well, I think the first target is about that 10,500 mark, which is the 38.2 Fibonacci retracement. Failing that, and indeed any support level between 10,500 and where it currently is, we would expect it to see to push up to about 11,000 and possibly 11,200, which would be the April high. But I have to say, I believe, although yet to be proven, that we're going to get some downside activity based on the 61.8, the overhead resistance, and this complex 333 correction unfolding the way it has. On the Australian market, you can see that it's rejected the 61.8 already. Key reversal here, rolling over the MACD down here, 2 bars showing, and the first target would be 4,540. So I would expect perhaps a little bit, just a wee retracement there on the intraday chart before it sort of pushed down. But certainly it wouldn't surprise me to see that motor down. That's currently 12 p.m. on Thursday, so we've had a number of hours, couple of hours of trading already to see that, and it continues to ease down. On the Australian dollar, interesting chart in that it's come up against in this overbought RSI, Relative Strength Index, which is really in overbought territory. We've got and I'll just expand the chart out a couple. We've got this doji reversal candle here, which is a throw over on this trend line that's come up from mid-June. These are often good indicators as to where we're going to go. So we've hit the first target, 96.43. This is our second target, which was the mid-2008 high of 98.49. Given the strength in the market, I wouldn't be surprised to see it continue on up, but also looking for that correction down. And so if it did correct, I would say that it would come down and land exactly on this 98.69 previous high on the double top high. So that's a potential. So if it did track down, that's what we'd be looking for support, and then further north. Or have we returned to the bear market? Well, only a little bit more time will unfold from that. This is the euro, and you can see the strength here. This is really very significant. This is the previous wave 4 high here, of which often you see these retracements. I can put a Fibonacci retracement on it just to determine from the high earlier this year. That was in December 09, and you can see in fact that the full 61.8% retracement is up at 1.390, which is considerably higher than from where it is at the moment. But interestingly, these wave 4 highs are often the place that these retracements, if that's indeed what it is, pull up. So if we get rid of that, that would be the target there. And certainly it's overbought on the stochastic. And just to keep in mind that the US dollar index is doing complete reverse of this. So what we're seeing in the US dollar index is that it has really pushed down heavily, but it's also looking for support. At this point, the structure suggests that it's a wave 1 to 2. So that means that the US dollar is going to strengthen once this unfolds, and the euro will weaken. And over a series of months, it should weaken down. On gold, well, what a fantastic rise this has been. It's certainly overbought on the stochastic. It's pushed right up into a high. Is it rolling over? Well, no, not yet. But certainly this big candle here suggested that it was either a bit of a blow-off with a bit of a reversal candle there, or frankly I don't think it is a very reliable reversal candle. We had a couple here, of course, where it did track down for a day or two before roaring up. So we're on track. We've hit the target at $1,303. That's target 1. 1323 is the second target for gold. Well, that's it for the daily report. For more information and detail on the charts, go to themarketforecaster.com.au. Thank you.